The Gatekeeper's Vault. In the bustling heart of Shanghai's financial district, on the eve of January 1st, 2026, Li Wei stared at the glowing screens in his office at the Shanghai Gold Exchange. As a senior vault manager for one of China's largest silver refiners, he had seen markets fluctuate before, but nothing like this. The new export licensing system had just kicked in at midnight. Only 44 state-approved companies, his included, could now ship refined silver overseas. Smaller exporters were shut out overnight. Li Wei's phone buzzed incessantly with messages from international buyers pleading for allocations. "We need 50 tons for our solar panel production line," one read from a Japanese manufacturer. "Premium, whatever it takes." He leaned back, rubbing his temples. China controlled 60 to 70% of the world's refined silver supply, and now Beijing was tightening the spigot. Officially, it was to protect resources and the environment. Unofficially, everyone knew it was strategic, keeping the metal for domestic giants in electronics, EVs, and photovoltaics. Li Wei's company had met the criteria. Over 80 tons annual production and massive credit lines. But even they had limits. Exports would trickle, not flow. Across the Pacific, in a modest apartment in New York, Alex Thompson refreshed his trading app for the 100th time. The COMEX spot price for silver hovered at $74.88 per ounce. High by historical standards, but a bargain compared to what he was hearing from Asian contacts. Alex was a retail investor, a former IT engineer who'd gotten into precious metals during the 2020s volatility. He'd stacked physical silver coins and bars over the years, but lately he'd been eyeing more. Reports from Shanghai showed physical premiums exploding to $8 to $10 over spot, with some deals whispered at $80 to $85 per ounce for immediate delivery. "This can't last," he muttered to his wife, Sarah, who was making coffee in the kitchen. "The paper price on COMEX is fake. It's all derivatives, less than 1% ever gets delivered. But in Asia, they're paying real money for real metal." Sarah glanced over. "You're sounding like one of those YouTube guys again. The ones ranting about a crime scene in the markets." Alex chuckled. "Maybe. But look at this." He pulled up an article on his phone. Elon Musk had tweeted just days ago. "This is not good. Silver is needed in many industrial processes." Musk was reacting to China's restrictions. Tesla used tons of silver in batteries and electronics. If supply tightened further, costs would skyrocket. The divergence had been building for months. In 2025, COMEX inventories had drained dramatically, down 70% from peaks, with over 70 million ounces withdrawn in recent surges. Registered stocks were at decade lows. Meanwhile, Shanghai vaults were hitting their lowest in years, drawn down by relentless industrial demand. Solar panels alone consumed massive amounts, and with the green energy boom, there was no substitute for silver's conductivity. Alex had started noticing it personally. His local coin shop, usually stocked with eagles and maples at modest premiums, now had empty shelves or markups of 20 to 30%. "We're waiting on shipments," the dealer had said. "Everything's going east." Back in Shanghai, Li Wei attended an emergency meeting the next morning. His boss, a high-ranking executive with ties to the Ministry of Commerce, laid it out bluntly. "Prioritize domestic needs. Solar, semiconductors, batteries, those get first dibs. Exports only if we have surplus, and only through approved channels." One colleague raised concerns. "Western buyers are offering huge premiums. We could make a killing." The boss shook his head. This isn't about short-term profit. It's national strategy. Like rare earths, we hold the keys. Li Wei nodded silently. He remembered the old days, when silver was just another commodity, flowing freely. Now it was critical, added to the U.S. list of strategic minerals. The restrictions echoed the rare earth playbook: control supply, influence global chains. In Tokyo, Hiroshi Tanaka, a procurement manager for a major electronics firm, was in panic mode. His company needed silver for circuit boards and solar components. With Chinese exports restricted, he was bidding on the Tokyo Commodity Exchange, where physical delivery premiums had spiked to $130 per ounce in some frantic deals. The COMEX price means nothing here, he told his team. We pay what it takes to get the bars. Similar scenes played out in Seoul and Kuwait City. Korean semiconductor giants, hungry for silver and chips and batteries, ignored Western benchmarks. Middle Eastern investors, with a cultural affinity for physical metals, scooped up whatever was available, paying 80% over spot if needed. The gap widened daily. Paper markets in New York and London traded endlessly. High-frequency algorithms pinging contracts, hedge funds speculating, banks hedging. But delivery? Rare. The system was built on promises, not metal. Less than 1% of contracts resulted in physical handover. Alex decided it was time to act. He drove to his dealer and bought every remaining kilo bar they had, paying a 25% premium. This window's closing, he said. Analysts were warning. Either Western prices explode to match Asia, or physical silver becomes unavailable at any price close to spot. By mid-January, the squeeze intensified. Reports emerged of delivery delays on COMEX. A major hedge fund demanded physical settlement on expiring contracts, but vaults were thin. Margin hikes from the CME flushed out speculators, causing brief dips, but physical buyers stepped in. In Beijing, policymakers monitored closely. Exports dropped sharply, only the big 44 companies shipping limited volumes. Global deficits, already structural for years, hit new highs. Demand at 1.2 billion ounces, supply lagging far behind. Li Wei oversaw a shipment one February day, not overseas, but to a domestic solar giant. This stays here, he thought, builds our future. Alex, stacking his new bars in a safe, felt vindicated. The spot price crept to $80, then $90. Premiums in the West ballooned. The illusion's breaking, he told Sarah. Physical reality always wins. As spring arrived, whispers of 100+ silver grew louder. Industrial users scrambled. Investors piled in. The great silver squeeze of 2026 wasn't speculation. It was the collision of financialization with hard scarcity. China held the gate. Asia set the price, and the West was catching up, one frantic bid at a time. The old Mason's words echoed in Alex's mind from a video he'd watched years ago. A price without product is just a number. In 2026, the world was learning that lesson the hard way.